Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is going to be a chart of the market. Today's the 27th day of May, Memorial Day weekend for the States. And looking at the chart of the ES right now, front month, last print of 1330.50. Up about 4 points on the day. Just a beautiful looking market, actually. I mean, if you look at our intraday dynamics that we look at often in our videos, these are proprietary indicators that we use to gauge where the market's likely to head. And of course, it looks like it's selling off, but this is generally speaking, where you want to buy. In fact, that's going to be right off the bat. The free informational day trade is just buy at 30.50 or better. Actually, you can buy up to probably 31 maybe or so. We'll just look at that high right there. We'll call it 32. So buy from 30 to 32. Go ahead and obviously stop at around 26 or so. That'll be the early session low. Actually, the low 26.75. So yeah, just go ahead and stop that at 26 and target 40. Hopefully, we can get a nice rush into the close as we head into the Memorial Day weekend, and generally you do get kind of a drift higher, which has been nice. Particularly yesterday, the move was nice. Had a bit of an errant move. If we scroll back and look at this is Thursday, Wednesday, you can see a bit of errancy right there. Had a nice blast up, but then someone just really wanted to sell the market. Again, we had beautiful bullish trend. Price technicals, the our proprietary indicators, the dynamics had a little bit of a hiccup. In fact, we didn't take some discretionary positions that we would have liked to have, simply because it was such a bearish morning on Thursday morning. But as you can see, midday, it certainly turned into a bull fest as the market was bullish, full all-out bullish, and all from all perspectives. 7 or 8 bullish biases suggesting a higher market. Didn't really get that. Certainly did close higher than we once went bullish, full all-out bullish around, I believe it was 2050, and certainly we got a 6-point move from that. But the real bullishness came with the continuation today, which was we kind of expected more bullishness on yesterday's early session. But certainly here today on Friday, we have gotten a follow through, and again, let's say this indication right here, a couple slightly weak indications, but of course it's Friday. On a holiday weekend, and that's what you're going to get. But hopefully we can get a blast higher as the volume is thin and prices easily moved into the weekend. So hopefully people aren't particularly scared, nervous. Well, I better sell over the weekend. It's a long weekend. You never know what can happen. So hopefully we can get a follow through on what we're seeing. Which is all out bullishness. So again, buy 30 to 32. Go ahead and stop at 26. Target, obviously it's a day trade. But go ahead and target 38 to 40 on that. So we're going to go ahead and minimize that. And we're going to look at, here's our swing system 5.0. Look at that. It's kind of we're actually getting ready to break this out and put it on Strategy Runner. Most of our portfolios on Strategy Runner are, case in point, portfolios. We offer very little individual systems. We prefer to have diversification. For instance, Swing System 5.0 took a pretty nasty loss right there. 12,600 down to 12,300 or so. So generally, we don't like to see losses like that, but fortunately, it did go right back to the long side and is trying to make up that ground as we speak on the Swing System 5.0. But I'm going to close that, and we'll do that. So 18,000. $10,000 max drawdown has been this portfolio. Of course, that if you take out, as we've mentioned several times, the 2-month span, which was unfortunate at best, you have a pretty nice equity curve. And of course, obviously, you did have to endure that. If you started there, it wasn't particularly pretty, but obviously if you started here, you're able to weather that, and you're right back to highs around $20,000, just looking at a quick snapshot. But actually what we're looking at is the, so that's long, from around 12,350. We're looking at, okay, so here's a chart of the daily market, the cash S&P 500, and just have a beautiful chart setup looking here. I mean, we have bullish indications. We've broken above this very pivotal band from 1300 to 1340. Very key band from 1300 to 1340. This is a fulcrum, and it will determine where the market will go over the next 3 to 6 months. Actually, so if we can get back above 1340, obviously to a new high, then certainly the confirmation suggests that we will be higher, probably about 1440, before we have our fall swoon in October. Having said that, selling may go away. Certainly they've been selling in May. May has been a down month. And as you can see right here, we closed around 1360, and we've been almost down to 1300. So there's the month of May, and it's just been a trek lower. That's what's interesting about the market, is we really should have held above 1340, broken above this area, but we didn't. And right now we're below 1340. What's more, from a price technicals perspective, the trend's obviously lower. From a trend following perspective, the trends obviously save this single close that we're getting here today lower. Now, we've not gotten 2 consecutive lower closes, to confirm this bearishness, which has been kind of interesting. While we're getting the strength, we need 2 consecutive lower closes. Had this close actually was slightly lower, but wasn't enough to merit 1628, 17th point, about a point. But wasn't enough to merit continuation to the downside. But we're going to hold bearish here on the market, particularly below 1340, given the new developments that we've seen over the last week. Now, we had been bullish by the market 20 to 40, but that's just not looking like the case. Short term, it's definitely looking bearish. We have a little bit of a turn here, but directional movement is bearish. Intermediate term is ticking up to bearish, even though it's neutral. Momentum is certainly bearish, ticking up a little bit, but definitely intermediate term and short term now bearish. Trend following again for our intents and purposes. Should we hold below 1340, bearish. So we're really kind of in a band of neutrality from 1300 to 1340, with the edge going to the bears. Now, having said that, over the last couple of days we have seen a lot of bullishness intraday, but look at the short-term trend. Right there. In fact, look at the more intermediate term trend was right here. Boom, boom, boom. Lo and behold, if we extend that, we've just broken it right back to the downside, and that'll be our next level of resistance. We could get an outside spike to 1350, but this more intermediate term, this 3-month trend has been broken, and we're now in a short-term trend. So the bears really look to have control over here. So we're going to go ahead and move on. Here's our newest system that we've mentioned. Oh, look at that. Just exited. Didn't even know that. Just exited a beautiful trade just as we spoke. In fact, I just got an alert for a trade, and yeah, I guess that was it. Selling at 30.25. So beautiful, 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 beautiful trade right there. There's the equity curve. Absolutely impressive, factoring in $25 for each round turn in slippage and commissions. After that, $132 is what you're left over with. And of course, $25,000 portfolio is what you're left over with. $132 every time we put on a trade. Now, having said that, that's over the last several years, almost 2,000 trades. If we look just over the last year or so. Wow, just unbelievable. Again, closing out again as we're doing this video. $80,000, $4,500 has been the maximum drawdown. So technically, trading 6 contracts, $3,000 in margin, add that to $4,500. You're under $10,000 to make 80 in 2 years, 4 months after slippage and commissions. 171.34 is what you're left over with. Beautiful system that we have. Again, just now closed out along from 16.75 to 30.25. So beautiful, beautiful, beautiful. And there's another 2. It averages probably, you can see, there was a loss that we just had, so it's kind of making up for that. You can see it averages about 2, maybe 3 contracts. Well, just as I say that, there was a few more. But just a beautiful system. This actually isn't offered on the website just yet. But certainly if you're interested, we can get you set up to include this in one of our portfolios. So We're going to go ahead and look over now, since we're running out of time, at the what did we want to look at? MRSE M30 and a beautiful book and a beautiful short there, short to cancel that loss, and then right back to the long side. You can't really see it by at 968.80. That's a pretty nice gain. So we're going to go ahead and minimize that. We're actually looking for Evo hasn't been doing much, so we shall minimize that. And there's the website. So if you, as far as our primary portfolios, just really haven't been doing much. Let's look over the last week. Again, today's Friday. As I look now, our most diversified portfolio up $845 today. And it is long, 15 contracts, 7 in the S&Ps, 2 in the Russell, and 6 in the Mini Dow. And just kind of a quiet day, another quiet day. But and as we look over Monday, there's the Matt Black 100,000 up $1,400. Not really much going on there. Delta B up 5%. Delta B's kind of been impressive this week. Again, kind of a flat day. Did have some losses in the leading Delta DTS, 10% on Tuesday. So that was notable. And again, just a very quiet day on Wednesday. And Thursday, another arguably quiet day, except save the Delta B again, putting up a nice 10% move. So Delta B up about 15% this week. And of course, these Delta portfolios are closed, save the Delta DTS has been reopened. It is actually a new iteration, and could be why it's leading the pack in terms of percentage. There you see right there. These are sorted based on percentage gains. 80% for the Delta DTS, MSA UDT up 67, Master up 65. And of course, those are the 3 portfolios that we would recommend right now based on performances over the last 83 days as of the close of trade on 26th day of May 2011. In terms of dollars, if you're really just wanting to make the most money, put together $98,000 in risk capital, obviously 10 to 20% of your total net worth, $98,000 to make $21,057. That's been the Delta Black, Delta DT up 15,000, Matt Black, Delta B, Delta DTS, a $15,000 portfolio right up here with the big boys. So that's pretty impressive. So if you're interested in these portfolios, you can go to the website, chat with the support team live. Just click on Ask an Analyst right there. And you can look up here, actually. Here's our Matt Black, MapDT, Triple Threat Trader HR, MSA UDT, DDT, ET. That's a pretty good portfolio. We actually don't track that on a daily basis. Certainly, we track all of our systems, but not on our primary basis. There's Delta DTS. Let's say you're interested in that. Or, as we've mentioned recently, the Q Trader on Strategy Runner's website, what, third best out of 500 portfolios over the last quarter, almost a 300% return. The reason we had been up over 300%, now it's up 250% on the Q Trader. What they did, I believe, they deducted who knows how much for slippage and commission. So that's interesting. It drops it to a 250% return. Oh, just a measly 250% return. There's the Delta DTS. So if you're interested in that, all you need to do is subscribe. Then follow the link in your welcome letter if you don't already have an account at one of our key 3 primary auto trading brokers. Open an account online in about 5 to 10 minutes. The broker will contact you with any additional information that that they may need, unlikely, and they of course will set up your account, hook up the strategies which run in full automation, your portfolio, and you can get the Delta DTS for just $788 for 3 months. So that works out. This trades, I'm not sure if there's 2, 4. I think it trades probably 10 lots, the Delta DTS. So you're getting essentially, I think it works out to about, well, obviously $78 a lot for 3 months. So you're looking at about $30, $25 for a system. Now most systems per lot are about $100 a month, some more, some 200, some 250. You're looking at about $25 a month per lot to be able to make the kind of money that you can make 84% or so in just a matter of about 4 months. But go ahead and click Add to Cart, and I believe we're running out of time. Yes, so we just click Add to Cart and enter promo code VIDEO. You're going to save an extra 20%. There's a little holiday bonus for you, and we will see you next time.